Awesome. We're not prejudiced against iOS. It's just it takes longer. Honestly, I would want you guys to get it all at the same time, but yeah, it's out of my hands at this point. I've given it over to
Apple
the
is
developers.
prejudiced to independent developers.
Yes, there you go. There you go. It was such a pain getting it verified and loaded up on iOS. So, but it should all come together soon. Hang tight. Okay, guys, so today's lesson is going to be awesome. We're going to focus more on price action strategies. I've been chatting to a lot of people, and it seems as if a lot of people are lacking with their price action skills, or they call it smart money concept skills, just basically understanding market structure, understanding all the little key bits like what is imbalances and fair value gaps, and how do you notice the shift in market structures and supply and demand and these kind of things. So I'm going to focus on going through that today. I'm going to go for about 40 minutes, and then Pramod is going to come on and teach some market structure and some of his strategies with you as well. As you know, guys, Pramod is the new trainer in the group. He's here with us full time now. We will be starting 2 more live trainings per week. So I'll be doing 1 to 2 a week, and Pramod will be doing 2 a week. So we should have a total of 3 to 4 trainings every week. We just want to bring you guys more and more value. And our goal is to help you guys win and help you guys become profitable. And that is what we're going to achieve. So I'm pretty sure it's nice to have another person teaching in the group as well, and not just me. Then it's another perspective and another person's skills and another person's experience. And it's just good to be exposed to different varieties of trainers as well. So we're super excited. We always bring you guys updates. We always bring you guys new things. I can't stop constantly thinking of new ways to improve the group and to help you all and to improve your trading skills. So just know that we're always thinking about you. Okay, let us jump in and begin this training.
Can I
So
ask
I've put together, yes, sure.
Just for us who are in the Sniper Club, are you gonna sort out the timing of your training and the training we have on the other stuff? I mean, are they gonna, you know what I'm talking about?
No, I don't know. I haven't spoken to them yet, but maybe I can.
I mean, can you sort of do the timetable so they don't intertwine with each other, your training and that live stuff?
It might make it quite challenging because the time slot we've selected now is a time slot in the beginning. I'm trying to accommodate for all the different people around the world and also for myself. So it's quite challenging for me to move that around, but I can chat to them. I don't know what time slots they use,
Okay. All right, mate. No problem.
But I'll definitely take it into consideration. Thank you so much for sharing that. Yes, you're right. Everything is recorded, but I know some people like to be here live as well. Then it's nothing like a live training. Live training is definitely better than a recorded training, but at least we do record everything, so it is there for you guys. All right, can you guys see the slides? It should say Price Action Masterclass.
Yes, I see it.
Okay, fantastic. All right, so let me dive into this training. So today's training is going to be all about price action. If you don't know what price action is, it's basically just interpreting the movement of the market and interpreting the language of the candles, the structure of the candles, the structure of how the market is looking. And it's going into the more of core concepts. Now, I believe that every trader, before they even start using indicators, they should always start with the core. The core of trading is price action. And by understanding price action, it will 100% improve your trading, and it will improve your knowledge of how to use the indicators as well. The indicators are amazing to use, but it's also very important to add your price action on top of the indicators. So whenever I use the indicators, I'm also always using my price action at the same time, because it just gives you added confluences, and it can really help you understand what is actually happening in the market from a bigger perspective and from price action. Nothing beats price action. Our indicators are price action based indicators, but also understanding market structure and stuff is going to help. So in this training today, I'm going to focus on market structure. I'm going to go through liquidity, imbalances, and supply and demand. These are just some of the key core features, which I really believe is going to help you guys a lot. So first, we'll just start with some market structure. Okay, so price action is also another form. They call it smart money trading or smart money concepts. And it's basically just understanding the style of how the institutional trade, how the big players trade, how would a person trade if they had large capital? So we basically just emulating and understanding how the big players are trading and using their money to trade. This will give you guys a massive edge in the market and will help you keep your trading in alignment with how these big players trade and how they think. So I'll be helping you become more aware of this market behavior. That'll help you trade in alignment with these market makers. The market makers are constantly trying to manipulate the retailers, and this is going to help you to understand that. So the banks, the institutions, the big players, the market makers, whoever they are that are playing with large amounts of money, they are the ones who move the market. The retailers don't come close to the kind of volume that actually will move the market. So for us, we want to know how these big players trade, because if they're moving the market, we want to trade in alignment with them. Therefore, it's essential for us to trade side by side with them to become consistently profitable, which I've spoken about this quite a few times in previous videos. So a good metaphor to think about is they're the whales and we are the sucker fish, and we just want to swim side by side them. They're the ones moving everything, and we just want to stay like in their wake, in their wave. So here's some smart money lingo for a lot of people who don't actually understand. The smart money are the big fish in the markets, like the banks, the institutions, the market makers. Then we got fair value gaps, or we also call them imbalances, which is where an imbalances in price is left due to a large order. And I'll go into more detail as we go into this. We've got liquidity, which is pools of stop losses and pending buy and sell limit orders, which is what indicator X does. It shows you these very clearly. Then we've got mitigation. This is where smart money is break even on losing positions. We've got equal lows and equal highs. Liquidity is below a double bottom or above a double top. I'll also go into more detail of this. We've got break-in structures, which show signs of strength and weakness in a trend. And we've got change in characters, which are super important. I'm going to go into more detail, which is showing change in character in order flow that represents reversal of the assets. So it's how to determine when an asset is actually getting ready to reverse and what to look out for to notice when this happens. So first of all, we'll start with market structure. Market structure is one of the most important aspects of analyzing and trading on the charts. It gives us such important, vital information. It's basically like the language of the market. It's basically understanding how to read the story of what's happening in the charts. It will definitely help you guys understand market structure and market movements to a whole nother level. So in this lesson, I'll be going over different types of market structures. So as you can see over here, these are the main kinds of market structures. We've got a bullish market structure, a ranging, and a bearish. So in a bullish market structure, we've got a set of higher highs. And higher highs is when we've got these swing points. So each swing point is higher than the previous swing point. And we've got the swing highs and we've got the swing lows. So we've got higher lows on the swing low points. Each swing low is higher than the previous higher low. So you can see this one's higher than that one, this one's higher than that one. And the same at the top, higher high, higher high, higher low, higher low. When we've got this continuation of higher highs and higher lows, it is showing that price is moving up and it's actually bullish. Then we come to a ranging market where we get the equal highs and the equal lows. Usually in a ranging market, price goes up and down and it finds this equal level, equal low, equal high, and it starts to range. And then we've got the bearish market structure where we've got lower highs and lower lows. So when we've got this concession of lower highs, prices going down, and lower lows, prices going down. So sometimes it's important, if you're new to this, there are a few indicators that can mark out specifically on the swing low points, the H, the HH or H low. So you can use that if you want to, start understanding how this works. You can always reach out to me into the group and I can share that with you. But there are indicators that will actually write this out for you so it can help you stay in alignment with this. And then we get break of structures. Break of structures are showing this increase in momentum to the upside or to the downside. And you'll see over here, we've got a higher high, higher low, higher high, higher low. And then as price, can you see this high point? As price extends above here, we get a break in structures. Break in structures just showing that this next structure, this part over here, is actually breaking above the previous swing high points. So this was the highest point it reached, and then price broke above that structure. So we got a break in structure. And then price retraced, and then it came again, and price went up and it broke that structure. So when we get these continuous break in structure points, it's showing us that price is actually moving to the upside. It's showing us that is actually an increase in demand in the market. Because when there's an increase of demand in the market, it will get higher than the previous swing high points. So break-in structures let us know when there's momentum going to the upside, if we've got bullish break-in structures or bearish break-in structures to the downside. And this is a typical framework of how market structures works. We get high highs, high lows, high high, high lows, which with break-in structures, which is showing this bullish momentum and prices moving up. And then when it reaches a topping point, a top or a bottom, it'll finally reach equal highs. It'll reach a point where, it won't go any higher. It'll reach equal high, equal low, equal high, equal low, and price will start to range. Price will start to range. We'll no longer get these big break-in structures. And then it will form these equal high points and equal low points. Whenever you see equal highs and equal lows being formed, you can know for sure that price is going to break them. This is something that I noticed long ago, and I started to track it during my trades. And every single time I saw an equal high being formed, I would draw a line on it, and I would fully expect price to break it, and price would always break that level. The reason this happens is we get these equal highs and equal lows being formed, and then retailers start adding their stop loss levels. All their stop losses going at the top, all their stop losses going at the bottom. And the market makers know this. So they form these ranges just as a way to trick the retailer. And the retailer will lay all their stop losses down. And then once that happens, eventually it'll get to a point where it'll shoot up, it'll trigger all those stop losses, and then it will shoot down and trigger all those stop losses. But this is basically how it goes. We've got this uptrend. We got this.
Seth, we lost your voice.
Your audio cut out, Seth.
And then we got this downtrend. But it's going up. Can you hear me now?
You just
How
came
about
back.
now?
Yeah,
You hear me?
you're right. Yeah.
Sorry, guys, my internet sometimes just goes up and down. I don't know how to make it better. Okay, but everything I'm saying should be recorded on the recording as well. So basically, what I was saying is that this structure is basically just showing you how the market moves. It goes up into an uptrend, eventually loses steam, and then starts ranging. And then we get a change in character, which I'll go into detail now. And then it starts ranging, and then it starts moving downward, and we start getting these break-in structures to the downside. And there are indicators that will mark this out for you on your chart. They'll mark out break-in structures, equal highs, equal lows, if you want to use them just to start understanding the smart money concepts. So here's an example of break-in structures going into some more details. So you can see we've got higher high, higher low, higher high, higher low, higher high. And then suddenly over here, price breaks below this point and we get a lower low. So as soon as we get the first lower low, that is showing us a sign of weakness. Because price was going up, was higher. There were first high lows, and at this point we got the first lower low, which lets us know there's weakness, and it's because it's breaking the previous higher low point. So these are just little keys to notice when we get these market structure shifts. And then over here, we've got on the opposite end, we've got a downtrending. We get lower low, lower high, lower low, lower high, prices going down. And then over here, we get our first higher low, and then price breaks and we get our first higher high. So as soon as we get our first higher high in this instance, we can tell there's more strength coming in the market. And it's showing us that this is the potential point where we're going to get this market structure break or market structure shift, because there was a continuation of lower highs, then suddenly we got a higher high. And the same over here, we got these higher low, then all of a sudden we got the lower low. So observing these breaks in structures can just help you determine the buyers and the sellers, who's gaining strength, who's gaining weakness. And these are very small little details that you really want to pay close attention to, because it can tell you a lot about what's actually happening in the price action. And you can do this on many different time frames. I like to do this mainly on higher time frames, so like a 30-minute, 1 hour, 4 hour, and then for the major market structure movements. And then you can go use this for lower time frames, to get more precise entries. So here's an example of a continuation in trend. So we've got a higher high, and then we've got another higher high formed, which breaks this structure. And then we got a higher low, another higher high formed, which breaks this structure. So can you see price is continually breaking the structure before it, which is showing us that there's now strength to the upside. And then, every time we get a break in structure, we get a retrace, break in structure. And we get this consection. As soon as we keep getting higher highs and high lows, that's showing us that there are continuations that are happening and that there's a strength in the market to the upside. Here's an example on the chart, and I can even take you into the charts, and I'm sure Pramod will also go into more detail about how this works. He also understands smart money concepts really, really well. So you can see over here, we got higher highs, higher highs, higher highs. We got all these high highs, and then eventually we get this big drop over here. It breaks this structure. It breaks this structure. As soon as we get all these major structures being broken, can you see? So this was the swing low over here. That was the swing low. That was the swing low. When this came down, it broke all of that. And when we get the previous market structure breaks, it's showing us that there's weakness in the market, and you see it broke all of that, and then it just started to range in this level. And once you understand this, once I explain it to you and you go test it on the charts, it's going to be like a holy grail moment, because it gives you an ability to see the chart in a completely new way, looking at structure points. Here we get a reversal in trend, which is also known as a change in character, which I'll also go into more detail. So you can see we've got a higher high. We've got this swing low point and this swing low point. These were the major swing lows. And then all of a sudden, price breaks this swing low and it breaks that swing low. So you see, like, if you had to draw a line from this swing low to this swing low, and then price breaks below all of that, it's showing us a change in character now, because this was the point. Price was in an uptrend over here because this swing low was higher than this swing low. So that's an uptrend now. Eventually, price broke below all of that, which is showing us a major market shift. Here's another example of a change in character. So you can see we've got this. This is our highest point over here. These are the swing highs, swing high, swing high, swing high. And then suddenly this goes up. It breaks all of them. It breaks above this swing high, this swing high, this swing high, and this swing high. So you can see all these swing high points were officially broken above at this point, which is showing us now that there's a reversal, major market structure shift happening. And this is kind of how it plays out. And you'll see as I go deeper into this training, this will start to be more clear to you. But as we get a market structure break here, this break in structure to the upside, price likes to retrace back. And we can use Fibonacci, which I'll be going over. We use supply and demand zone. So this is a demand zone here. We get a market structure break to the upside, comes back, taps into the demand zone. It'll tap into also certain fib levels, which I'll be going over. And it will also be tapping into what they call, discount and pricing levels, which works with the fibs. And I'm going to get into that just now. So now is liquidity. I'm going to go through some liquidity with you guys. Liquidity is also something important to be able to spot. So what is liquidity and how do we identify it? Liquidity is basically just a collection of pending orders, or stop loss levels in the markets that people have left, obviously, to enter or to exit their trades. In essence, we are all liquidity in the market. Liquidity helps determine where price is likely to go next. We can get a good idea of where price will be magnetized to and use that information to help us form good quality trade ideas. So price likes to travel from liquidity to liquidity because these stop loss levels, these pending limit orders, is where there's money resting in the market. And price likes to move to those areas to trigger that money. That's just how the markets actually move. They move from low to high based on orders within the order book. So popular areas where retail traders would usually enter positions are equal lows, equal highs, support and resistance levels, trend lines, and Fibonacci zones, which are the golden zone 61.8. These are places retailers are likely to enter into the market with pools of orders waiting. Smart money knows this and aims to grab liquidity in these areas. So the smart money understands how the retailers trade, and they use that to their advantage. So for instance, over here, we've got equal highs, and you'll see price will range, price will either go up or down and then reach a point where it will start to range, and it'll form these equal highs and equal low points. And like I said before, whenever you see equal highs or equal lows, you can know that price is going to break it at some point. And in this example, you'll see price breaks above, triggers the stop losses, breaks below, triggers the stop losses. It happens on repeat, guys. If you look at the charts, you'll see this happens over and over again. Over here, we've got a downtrend channel. Price is in this channel, and it's kind of like a ranging within this channel. And then all of a sudden, it will break out the channel to break the equal highs. So whether it's equal like this or whether it's a channel downwards, price will always break those equal high points. So you'll draw a line from the tops, from the bottom, and you can expect price to break it at some point. It's the same. Here's the Fibonacci level. So price will go up. A lot of traders will enter their long positions or their shorts when price gets into the golden zone, which is 61.8 to 65% of the retracement, and some down to 79%. When price goes up and comes back down, these zones are basically the discount zones where you actually get the asset for cheaper. So this is where a lot of retailers will be waiting to enter their trades at these points. Let me go into some imbalances. Talk about it. This is basically going to efficiency and inefficiency in the market. So what is a market imbalance? How to identify it, and imbalance strategies, which is very similar to liquidity. Once you understand the liquidity, which is equal highs and equal lows, once you understand imbalances, market structures, they all kind of build on top of each other. So when you look at efficient price action, we notice that all wicks meet. I'm going to show you exactly how to spot this on your charts. This means that both the buyers and sellers have an equal opportunity to access liquidity in the market. When you look at inefficient price action, we notice that all the wicks do not meet. This means that an imbalance has been created in the market between the buyers and the sellers. Whenever there is an imbalance created in the market, price likes to come back to balance it, therefore giving both the buyers and the sellers a fair chance at liquidating the market. See that this does not mean that all imbalances will get filled, but the probability of happening is extremely high. So this is how it looks. When we've got inefficient price action, you'll see if you look at your candles, and it's better to look at them on higher time frames, so like 1 hour, 4 hour, 12-hour daily, and you will notice this. If you can see we've got a wick going to this point and a wick to this point, and then there's this open candle in the center. This is the imbalance between the two. So what you normally do is you mark a line on this wick, mark a line on this wick, and that space in between is the imbalance. So an imbalance is basically where a market maker has executed a large order and they've actually run at a loss. So usually price likes to come back to this. It can be a magnetic level to fill in this order so that they can balance their book of business. As opposed to on the other side, this is efficient price action. This is when it's balanced. Can you see the wicks meet? So if you draw a line, it's from wick to wick. But over here, you can see there's a big space in between the wicks. Here's another example. So this would be on a downtrend or a bearish inefficient, inefficient. And here's bullish. Price is going up. It's the same story. This wick reaches here. We draw a line. And then we've got this open space and then another wick here. We draw a line. And this becomes an imbalance. They also like to call it a fair value gap. And you also get indicators that mark this out for you. If you don't understand how to spot it, you can look in TradingView. There's lots of free indicators. Look for fair value gap indicators or imbalance indicators, and it should mark it out. And then we get efficient price action where they will actually meet. You'll get the wicks meeting and it will balance out. So these become magnets for price. Price oftentimes, very high probability, price likes to come back to these regions to balance out, because you know that what's happening behind the market is the market maker has run at a loss on their order. So for them to come back is a high probability so that they can balance their books. Imbalances usually occur after we see these big movements. You'll see wherever you see on the chart this big movement or a big candle, there's always an imbalance left behind, always. And you can see here from this wick to this wick up here, big imbalance. Price is going to come back to this zone to fill their orders. And then if we zoom out, you can see this is another example here. We can got the wick over here, the wick down here. We've got the space. Price comes back, taps into it. Price comes back and taps into it. And you'll see, guys, if you mark this on your charts, if you do some back testing, you'll be super surprised how it actually responds to this so well. So like I said, price likes to come back to these inefficient zones to fill them in. And you'll see a break to the downside. We left an imbalance. Price comes back, taps into that imbalance, and then carries on dropping. So you see, the market makers, if they do a massive order at this point, a sell order that creates this massive movements, the price is just going to come back to tap into that so that they can balance their books. That is all that's really happening. Imbalances act as a form of liquidity zone as well. So just understand that this is pending liquidity resting in this area that market makers like to come back to. That is why, remember, guys, I said in the beginning, we want to trade in alignment with the market makers. And if we can understand their process of how they trade, it helps us understand how to trade in alignment and emulate their trading strategy. So you can see here, we get this big candle drop. It leaves behind this imbalance zone. We mark it out. Price comes back, taps into it, comes back, taps into it. And I'm only going to show you a few examples, but I can guarantee after watching this, take some time, and actually go on the chart and you will see how this happens over and over again. And then over here, big imbalance to the upside, big movement. So it's often, you'll see these momentum candles. And you'll notice, guys, momentum candles are the footprint left behind by these big players. That is the sign. When you see these big movements in the market, that is the sign that lets you know they are active in the market. And they will leave behind order blocks. They'll leave behind fair value gaps, imbalances, and these become clues for us to follow. Imbalance can become ranges of liquidity zones as well. So oftentimes when you draw imbalances and you stretch them out, they can form a range, and you'll notice price respects these levels because we want to know where's the liquidity in the market, guys. This is a liquidity game. Trading is a liquidity game. Price likes to travel from liquidity to liquidity. And if we can understand where are these liquidity levels located, and I'm going through a lot of them today, either the stop loss levels, the imbalances, supply and demand. We want to have a good understanding of where is the liquidity located in the chart, because this is where price is most likely going to gravitate towards, because it's a game of business. It is a business, and liquidity is the name of the game. Picking up demand liquidity, going to sell liquidity. It's all just picking up liquidity at the best prices. And oftentimes you'll find liquidity ranges from a low of the range to the high of the range. So price likes to come back to these zones. And you can see over here, we've got an imbalance zone over here and over here. And price comes back to it over and over again, guys, like repeat. It's quite amazing to see once you spot it, once you can mark it on your chart, once you can see it happening just according to how I'm showing you, It's quite interesting. It's quite an amazing feeling. So order blocks and imbalances combined act as an extra confluence. And I'm going to go a bit into detail about order blocks just now. And you'll see whenever we get these big movements, so these big momentum candles, which often leave break-in structures, they leave behind these imbalances and they leave behind demand zones. And they often come together, a demand zone or a supply zone and an imbalance. And this is just showing us, this is liquidity, guys, liquidity. So we get these massive moves to the upside. Chance our price is going to come back, tap into this liquidity, and then carry on to the upside. And as you can see in this example, we've got an imbalance here, a demand zone here, and we've got a supply zone here, and we've got an imbalance here. Price taps into this demand zone imbalance, fills it, taps into this one, fills it, and then carries on, taps into it again. So you'll see oftentimes it'll tap from demand zone to supply zone, from demand imbalance to supply imbalance, and on repeat. So here's a simple imbalance strategy. Imbalances can be used for entries and for targets. All you do is you mark out the imbalance and the order block on macro zones, wait for price to come to your zone, confirmation entries on micro zones, which I'll show you now. So for instance, you'll mark out these levels, you'll mark out on your chart. It's always good to be aware of where are your demand zones, where are your imbalances. I do that on repeats. Like I've done it so much that whenever I look at a chart, I can immediately just see where the imbalances are located, where the demand and supply zones are located, and then price. So you want to mark them out on a higher time frame. Whenever you mark them out, go into like a 4-hour, 6-hour, 8-hour, 12-hour daily on a higher time frame. You mark them out, and then you'll notice that you can see here we've got entry zones, so you can either enter them or you can use them as targets, because price likes to magnetize, from imbalance to imbalance, from imbalance to imbalance. So either way, it can be an entry and the target can be the next imbalance, or the one imbalance can be the entry and the next imbalance can be the target. So here's an example basically of the strategy. So we've got the higher time frame. It can be the 4-hour, it doesn't have to be the 4-hour, but 4-hour, 8-hour, 12-hour daily. So we mark out our order blocks, we mark out our imbalances, and I'm still going to go into detail about the order blocks now. And then you'll see price comes down into an imbalance zone, then shoots up back into the imbalance zone. So either way, either zone, we're focusing on either an entry and a target, or a target and an entry and a target. So this is the example. So once price comes back, now we are anticipating that when price is going to tap into this order block and imbalance level, because remember, we've marked out this liquidity, we know it's a magnet for price starts moving back to it. As price taps into it, then we can move over here into a lower time frame for a micro entry. So basically, we're looking for the exact same thing, just on a lower time frame. And then you can see this is the 4-hour order block and imbalance over here. When price taps into it, then we wait for it to repeat the process where we get another minor drop or momentum to the downside. It leaves behind an imbalance. It leaves behind a supply zone. And then we wait for price to tap into this level. And then we take our entry from there. So we don't enter on the higher time frame, because on the higher time frame, we can't get a precise entry. And chances are we could lose a lot of percentage. But when we see price tapping into this zone, then we come to a lower time frame and we look for the same setup again, just on a lower time frame. So let me go now more into supply and demand, which it all just ties in together, guys. It's all just part of the exact same thing. So supply is just showing sells in the market. Demand is just showing buyers in the market. So an area with increased supply is an area with increased selling pressure. An area with increased demand is an area with increased buying pressure. So topics I'll cover in this segment here is we're going to focus on rallies. So a rally is when the buyers exceed the sellers. The base is when the buyers and sellers find equilibrium. And a drop is when the sellers exceed the buyers. So these are the terms I will use. So there are two types of supply and demand zones. Number one, we've got continuation zones, which remember in the market structure, it's when we got a concession of higher highs and higher lows. And that is where we get rally-based rallies and drop-based drops, which I'll show you with some diagrams now. And then we've got reversal zones, which are rally-based drop and drop-based rallies. So we've got two types of supply and demand zones in the market. First, we'll start with these continuation zones. These kinds of zones are created when price moves in a specific direction. It consolidates, then carries on in the same direction. So you'll see over here, and this is going to tie in with market structure as well. Price rallies to the upside, which is showing increased demand in the market. It reaches a base, and oftentimes price will reach a base. It won't just continue up forever. And then price will rally again, which will create a break in structure as well to the upside. So we got price going up, higher high being formed, and then bases, and then rallies again with another higher high being formed. So this is what we call a rally base rally, which is showing continuation to the upside. Oftentimes when price rallies and it starts to base, these bases end up being demand or supply zones. And you'll see what I'm saying as I progress. And then as price expands out of the zone, so remember, these bases are also equal high and equal low points. We know price is going to break them. As price breaks out of this zone, we get break-in structures because it's breaking all the previous structure levels. And usually it's accompanied with a big candle, big momentum candle. And then price will retrace into this fib zone or into a demand zone, which is where we take our entries into the continuation of the trend. And that's to the upside. On the downside, it's the same thing. We get a drop. Price will form a base, and then it will drop again. And oftentimes when we get these drops, when price does retrace, you see, when we get a drop-based drop, we're getting these break-in structures to the downside, which is showing there's weakness in the trend, which means we've got this downtrend forming. When we've got downtrends forming, we're looking for an entry, and these become our entry zones. When we get price break a structure, we get this drop base, break the structure down, price retraces, it taps into the supply zone. Because remember, guys, this is the same thing I was talking about with the imbalances. When we get this drop to the downside, it forms an imbalance and leaves behind supply zones. Price comes back, to fill in that imbalance so it can become efficient price action and then continues with the downtrend. So here's an example on a chart. So you can see we've got here, price rallies up, it forms a base, and then it rallies up again. And you will notice, guys, if you ever notice price moving an uptrend, this is exactly what it does. Like when you look at the charts now, if you weren't aware of this before, you're going to look at the charts completely differently. So price rallies, bases, rallies, we're getting these continuous break-in structures to the upside. And then we mark out these demand zones and also imbalance levels. So the imbalance in the demand zone will be here. Price oftentimes will retrace back to this level because remember, this is where the liquidity is resting, tap into it, and then it will move up from there. And this usually occurs at swing low points. Where we get low market structure levels, we get these bounces occur because they tap into these demand zones, into these imbalances. Here's on the opposite end, we've got a drop-based drop. So price drops down, and you can see, you can always look at these momentum candles, guys. Remember, these momentum candles are the clues that letting us know these big players are in the market. So price drops, we get a base, and it drops again, continually breaking structures to the downside. Can you see it's breaking the structure to the downside? It leaves behind these indecision candles. These indecision candles are usually what the base is, because remember, a base is just an area of contraction in the market. And this is what we use indicator X. Indicator X is a contraction tool, and oftentimes it lines up perfectly. And there are also other supply and demand indicators you can use. I can share some into the group if you are interested, that will mark all of this on your chart for you. And it's a good learning method. I used to use the indicators for a while, but they can overcrowd your chart quite a lot. And then once you are familiar with where to mark these out on your chart, then you don't need them anymore, because then you can just mark out, because you understand it so well. So it leaves behind a supply zone, price comes back up, taps into the supply zone, and then it carries on dropping. And then we got reversal zones, number 2. And these reversal zones are also excellent to realize. Once you understand how continuation zones work, when you understand how reversal zones work, it will really give you an understanding of market structure, how market behavior likes to operate. So these 2 kinds of zones are like trading order blocks. So order blocks is a very big part of trading as well. It forms when price reverses direction and creates a new swing pattern. So you'll see over here, this is the opposite of what we were doing before. We get rally-based drop. Instead of a rally-based rally, we got price rallying up, basing, and then dropping. And we can notice by the breaks in structures. So the break in structures are going to tell us a lot. If it's a break in structure to the upside, we know it's continuation. If it's a break in structure to the downside, we know that there's a reversal happening. So you'll see break in structures are very important to pay attention to on your chart, because it's going to show you whether the market's got strength to the upside or got weakness and going to the downside. So you can see we get a rally up, it bases, and then it breaks the market structure to the downside, breaking below the previous swing low, which is showing us now weakness to the downside. Here we mark out our supply zone or our imbalance, price taps into, and this becomes our entry, because we know there's weakness in the market. Usually when we get break-in structures to the downside, it's showing us there's a weakness in trend, that the trend is actually changing, so price is going up, and now it's actually starting to go down again. And on the other way around, we've got a price drop, base, and rallies. You see, we've got rally, base, drop, base, rallies. So when price drops down, and then it bases, and then it suddenly rallies up, breaking the structure. Can you see, guys? It breaks the structure to the upside, which is showing us so that there's change in character happening. And then we mark out a demand zone or our imbalances. Price retraces back to this level, taps into it, and then we can take an entry from this entry point. So here on a chart, just to show you how this works, we got here rally-based drops. So you can see price rallies up, and you'll notice this on your chart, guys. These are excellent ones to enter. They're really fantastic. It rallies up, we get this base. We also start noticing indecision candles. So bases on a higher time frame are just basically indecision candles. And I've spoken about this a lot in previous trainings. If you're not so sure on indecision candles, definitely look them up, because Indicator X is based on indecision candles. We also use inside bars as well, and contraction points. But we get a rally base and then suddenly a drop. And you can see we get this drop. Whenever we get this big shift in momentum, these big momentum candles, it always leaves behind a supply or demand zone and an imbalance. We mark out these imbalance areas, and then price comes back on, taps into it, and then carries on in its initial direction. So he has a drop base rally. So price drops down, and then all of a sudden forms a base. Guys, bases won't always be completely perfect as well. Like price action isn't always picture perfect. So sometimes we're going to have to figure it out and interpret it. But here you can see it drops down. It forms a nice indecision candle. I always look for higher time frame indecision candles. Those are very big clues, and that's something I've always looked out for. So we get a drop base, and then we get a rally up, marks out the indecision candle, which is our demand zone, and also look out for imbalances. Price comes back, taps into the zone, and then it carries on in its initial direction. So these reversal zones form when we get one major swing that completely changes direction, usually from institutions placing massive orders in the opposite direction. Reversal zones are highly profitable zones to trade because of the amount of liquidity that is available in the market. They're the most profitable out of the 2 zones because it takes more liquidity for a reversal to happen than what it does for a continuation to occur. How to locate and draw the best zones to trade. So once you have identified your base, you want to look for indecision candles, as I was talking about. Indecision candles where both the buyers and the sellers come into power. It's a candle with mainly wicks and a small body. Let's have a look. So look, when marking out indecision candles, mark it out from wick to wick. So you can see here, whenever you start seeing lots of like wicks, you get these small bodies and you get wicks on either side. Those are indecision candles. And this one over here, this purple one, is a fantastic example of an indecision candle. And you'll notice as well with indicator X, it marks out these levels because an indecision candle on a higher time frame is basically a contraction zone on a lower time frame, because it's just showing a higher low and a lower high occurring simultaneously, which is also a form of inside bar. And indicator X is basically a contraction indicator. So you can see we've got a drop, a base, and a drop occurring here, breaking structures to the downside, and it's leaving behind these indecision candles. So this becomes a prime zone, which we can set alerts. So when price comes back into this zone, we can look to take entries. So here's another example here. So you can see price drops. We got a base and then a drop. We got these indecision candles that form. So we mark out our supply zone. And this becomes a point of interest to us where we're looking to enter a trade. Then we wait, for price to come back to this level. When price does tap into this level, we can go into a lower time frame. And you can see this is how it looks like. Price, guys, you'll be so surprised when price taps into these zones. It is so precise. Like I've seen this happen multiple times. Price will just touch it, just literally tap into the zone. Usually we'll get a big wick going into it to drink up the liquidity, and then price will just suddenly fall, like immediately just drop, because it just had to tap into that liquidity to balance the books, and then boom, it just carries on dropping. So how do you correctly identify the zone if you see multiple zones? So this is a question a lot of people ask me as well. How do you know which zone to take? Because if you've got a massive momentum candle leaves behind a demand zone, and then another one leaves behind a demand zone, which one do you enter? And this is where equilibrium, discount, and premium zones come into play. Now, guys, this is all based on smart money concepts. I jumped into smart money concepts a lot when I started out my trading. It became something I actually got very obsessed with. If you want to know more, there's so much smart money concepts information out there as well. If you want to take it further, I definitely recommend looking into it and researching and understanding price action and smart money concepts. When identifying multiple zones, you go with the zone that is within the discounted levels. We use Fibonacci retracement to identify these levels. And this is pretty common. First, you need to identify the equilibrium level. This is located at the midpoint of a swing. It is the level where an asset is neither cheap or expensive. It's in a neutral zone. You do not want to look for trades at the equilibrium level, rather when price is above or below it at a premium or discounted level. This is why guys use their Fibonacci's. So basically what you'll do is you've got a swing low, you've got a swing high point. A lot of traders will mark a fib level, a Fibonacci from a swing low to a swing high, and then they'll mark out the zones. So you've got the equilibrium, which is the middle of the swing low and the swing high points. And then towards the high point is called the premium zone. Towards the low point is the discounted zone. If you are looking to short the market, you want to enter into the premium zone. If you're looking to long the market, you want to enter into a discounted zone, because this is when you're going to get price at a cheaper rate. In order to identify these levels, we can use this Fibonacci retracement tool. The levels we're looking at for this tool are either the 61.8, 72, 79. Now, it doesn't have to be exactly this, but it's just levels that I've used. For long entries, we drag the fib from top to bottom, and from short, we drag the fib from bottom to top. These levels help us traders identify when it's the ultimate best price to enter into a trade. So you can see over here. Now that you're aware of these zones, by looking at the Fibonacci, you can clearly see which is the best level to take a trade off of. So you see price shoot up like this. You mark out your zones, and you'll see it often ties in the demand zone. This demand zone ties in with this discounted zone, and this becomes our zone where we're waiting for price to come into, because price will retrace. This is where we get price as a good price, Because remember, guys, the market makers are looking to get the best price for their entries, and then they're going to drive price up, and then they're going to sell it at the best price as well. Remember, it's a business, and it's just traveling from liquidity to liquidity. As you can see, price went straight into our discounted range before tapping into the demand zone. So if we'd marked out this demand zone, like oftentimes price will break through a demand zone, and this is one of the reasons why, because we want to mark out the swing low, the swing high, and then we're targeting for our long entries, the discounted ranges, which are between like the 61%, 70%, 79%, whenever price gets to these levels. And if it coincides with a demand zone, that becomes more confidence for us to look to enter. Here's another example of a short trade. So remember, swing high, this is our swing high point, and this is our swing low point down here. So we drag our fib from the swing high to the swing low, and we mark out our premium ranges. And over here, we've got the 61.8, 65, which is the golden zone. And then we've got the 70 to 79. So I like to look at all these levels, and you'll see, look how many times price came back into this level. Tap back in. And remember, we mark out our demand zones as an extra confluence, and supply zones. This is a supply zone. Price taps into the supply zone. It taps into this premium range and then drops. Comes back in, taps into the golden pocket, drops. Comes back, taps into the range, drops. And you'll notice, guys, if you pull a fib from swing high to swing low, you're going to see it responds to these levels because, it just makes sense. If this was a business, you're looking to get the price at the best prices you can actually get. All right, guys, so that is my quick training on price action. There is a lot more to it, but I didn't want to overflow you, and I'll continue in the next sessions as well, going into more detail about that. Pramod, are you here? So Pramod's going to take over now, and he's also going to go through some price action with you and show you a few other amazing tips and tricks. Okay, I'm going to stop sharing my screen so you can take over.
Okay, sir.
Hope you guys are enjoying this. Price action is really amazing, something I love a lot. Okay, awesome.
Yeah,
Cool, Pramod, take over, man. Thanks a lot.
yeah, thank you so much, sir. Yeah, you are teaching SMC smart money. I'll show you how it's work. Same thing. You can see here. Sir. See, this was a breakout structure, and it's rally again. It came here, right? When we have to take entry in this way, fib circle, right? The fib one, last low and high, and how it will confirm high. That is the main reason here. High will confirm when the last bullish candle, right? Any bullish candle, last bullish candle, it has to close bearish. Then only we can mention as this is the high, and now it can retrace. There is only two possibilities after break of structure. It has to come near demand. If not, recently the breakout area. If it is coming inside this structure, one second, if it is coming inside in this way, it will come near demand. And how we have to calculate? You can go in fib. Last swing low and high. This way. When candle start coming from after break of structure, it will come near somewhere here. Then on it will start going. If it is not coming, then you have to wait till here. You have to see any bullish confirmation here after coming here. See, market was like it was holding here tight, and when we got this bullish confirmation straight, we have to take our position, our stop loss below this, and start again. So today what I did, I'll show in 5 minutes. Same thing happened in gold today. So yesterday what happened, it in 5 minutes, okay, in 5 minutes. So it take high and low, and it made lower high, and it was change of character. So for next day, I was pretty sure it will be in short side. because we got change of character in 5 minutes, 15 minutes. So I was aware, okay, we should look short now because it's made already new low here. So it will come till near supply. This was the supply. And it came, right? And today, and sorry, yesterday, when we got this sudden drop in CPI news, we got like sudden drop. Immediately what happened? It start going very like crazy. And it closed above this candle. This was of change of character, again bullish side. So I cannot take immediately long from here. I should wait till demand. I don't know whether it will come or no because it was like New York session and it was CPI news. So you can see, and first, where is our demand? Last, wherever you see the bearish candle in trend, you have to mark that candle, full candle. This was our demand. This was our completely demand zone. The candle was making very big. So just you go Fibo, use Fib level from low to high. So this was our zone. You can see this. So I didn't take any long from here. Immediately, when I got this move, I didn't take any long because it was very volatile. I was waiting. When it came return and I was still waiting to take good trade. No, I was thinking like if I get here any confirmation, I thought to take. I didn't get any confirmation. Like it was like playing. When it came here, I saw this rejection. Immediately I took buy position, my long position. I took from here. And I was holding till today morning. I took screenshot to show you guys. See here. Same this when I got this move. I'm sorry. I got this move. I was waiting. It was like a change of character. When it came, I was holding. When it came completely inside and start going, I started take my positions. And my take profit was this. This why? Since like 3 days, this zone is working as a SNR, like support become resistance. Now it was working like in this completely this zone. So even now it's working like a resistance. You can see. So morning, like when I saw this candle somewhere here, I just took my all positions out, and I was waiting for again buy positions. If I get here, again I want to take buy because when candle will close below this, it will convert to bearish. Candle has to close somewhere below this, then only I can take uh, short. So when again it came here, I took immediately because I got bullish confirmation very clearly. This was hammer. This was clear hammer, and this is indication for buying. Immediate I took buy here. My stop loss were somewhere here, and I was holding. Again it went here. Even now I took buy position from here. Here I'll tell you why. See, it's making lower highs, right? There is no new low, and market totally is bullish. So I look only buy. And here is here we have to take long position. I told in last session also because if I switch on this trend X, there is a support here. In buy trend, there is a two option for us whether I have to take my long position from here or I have to wait near support. Because of this event, I did not trade in. I did not take any trade because this was huge, like from 50 to 19, almost 300 pips. So immediately I cannot take it. It will be very volatile. So I was waiting. And this position now, why I took here, when I saw this bullish candle, I thought let's take and we'll keep stop loss below this. And just now I closed my position. I took here. I was like this trade. This was yesterday trade is running and today now. Because I was like, I will be keep watching, and in bullish trend I look only bullish. And I'll come to this smart money. This is very nice like topic. In coming days, I'll teach you. It's very interesting. It worked very nice. And somebody was asking how to take entry. Like if you get to a demand zone, you won't get any like you want to wait perfect entry, then you have to wait for 5 minutes confirmation. See, if you're making if you're making your chart in 1 hour, your trade should be in 5 minutes in smart money. If you're making your chart in 4 hours, then you have to take in 15 minutes. So 1 hour, 5 minutes is very comfortable for me. I'll take in 5 minutes trades, because in this smart money we'll get very good confirmation. I'll show you. With small candle, you will get completely trend reversal. I took this trade. Trust me, I took this trade. What happened? Market was like it was coming every single day. It was coming. So here what happened? I have this trade. This see here what happened. See how we'll confirm that this is the breakout structure. We have that. See, this is breakout structure. You know, whenever we have to see last bearish candle, which is the last bearish candle with body. This is last bearish candle. We need one candle to close above. Yes, we got this candle. So this is, we have to mark one line here. Okay, we'll do that. What I do, I'll take my okay, this is my change of character. So immediately if it go returns, sorry, 1 second, this is not change of character, this is breakout structure. Okay, this is boss. So whenever we'll give breakout structure, there is a chances it will go back to supply to fall again. So immediately it went and closed candle above. So what will happen in this case? This is the change of character. This is the sign of trend reversal. This is a trend reversal. This. So I thought, so because in gold, what's happening? It was keep falling. So immediately I got change of character. I thought, no, I saw this bullish candle and this was completely range, and we got change of character. I thought, okay, from tomorrow let's see only a long position. And this was next day it was completely range and suddenly got bullish pump. So it was like confirm. It will be start going up till where now again we need change of character for opposite direction. And every single day, trust me, after break of structure, wherever you will get break of structure, it has to come near demand and it will start going. If it is coming down, it will come near demand zone, again it will start. So every time you will see same thing that whenever you will get break of structure, it will come near demand, it will start running. So for this, when you switch on trend X, you will get very good trades with this help also. Just you see it, when we got this, we'll start looking long positions in daily time frame. So every day we'll get long position. So next week it came near pivot, again long position. So in this way it will help. It like Trendex, it's work like structure. Same thing, you see. So every day we have to look long position because of we are in uptrend, and this you can see it's clearly uptrend. Whenever you will get this massive move, right, we should not take long position. That is done because it's reached almost high. You can see here TP1, TP2, TP3 done. If it's coming so like crazy, then we have to stop because this is like literally trend reversal. See where it started, I'll show you. So this is, you can see here, it completely it made low. So we have to look short position and see it started again. We got here trend reversal. So in this way we have, like, if in smart money, it's very nice concept. We have to understand it's very easy. If we have to use Fibo, and if you are in uptrend in 5 minutes, whenever you will get bullish confirmation, just you have to take only buy positions. You will get very good trades with small stop loss, tight stop loss with help of Fibo. And this you can see. I'll show you one thing. I have still we didn't cover this one. See, in Trendex, what will happen? We have different, like 2-3 different types of Trendex. I'll show you pivot. Like recently, I'll show in gold only. I saw in BTC many detail. See this no. This is called inside Trendex. This you can see there is inside, right? This completely it is in inside. So that week it will be very confusion. It will make you like confused completely, or it will be in range. For whole week it will be in range. This was like some event, so it went very crazy. Whenever you will get this type in daily, like in daily pivot, just avoid trading on that day. It will be in range. I'll show you example. BTC. See, this is today's. You can see here. It will be very confused day that day. It will be very confusion if you get in this type of trend X. Always it will be either up or down. Then only you will get very good move. If you see in this way, it will be very confusion. It has to be in opposite side. Then only you will get very good trending. You have to get in right side. You just think this is outside and this is inside. If you get this in this direction, then it will be very crazy. I made a good, very nice PPT. I'm working on that. So I'll show you. I made so this is very first time I did. Even I don't know. I searched in YouTube and I started learning there, and I did something very nice. I think that you will understand very nice. When you will be trending, what is sideways, weekly. No, I'm doing this. By tomorrow, I'll teach you everything. How this is the inside, this is outside. So I'm making. So I'll show you how to take trades. So I am working on this. By tomorrow, I'll show you. See, because this reason today you can see you have result here only. It's so like people that they are going for long, it's coming down. Actually, no, what's happening in Bitcoin? If you go in daily time frame, it is in range. I think you should wait for breakout. You wait for breakout, you will get very good trade. Now, like this week, I think you won't get any trades. So in this, in market is there.
Pramod?
Yeah, sir.
Do you also use the 200 EMA with all this price action and
200 EMA, right?
Yeah.
Yeah, 200 EMA is my favorite, sir. Trust me.
Okay.
200 EMA, people are like, last session, I told I use 200 EMA. People are little confusion about that. People are thinking about 200, I'm going for long, below 200, I'm going for short. No, I'm using in this way. I'll show you. You're talking about, sorry. You're talking about 200 moving average, right, sir?
Yes, exactly. So I'm just wondering if you used the smart money concept and then you use Trend X as confluence. And
I'm sorry. Yeah. You please go ahead.
Yeah, I was just wondering on which is your highest confluence? So like demand and supply zones or EMA or
yeah, sir, I use Trendex, and once you learn smart money, you no need to see every time what's happening here, because you are very clear that you are in one direction. So the SMC, what I'm doing, I know SMC. but I don't apply any SMC. When it will be in range, that time I'll get, see, now it's completely, if you see the one in 1 hour, from last market is here only from Monday. So nothing, like I'll get confusion. So I'll do in 5 minutes, I'll go. You can see here, if somebody comes to the to somebody purchases this indicator, he get confused. He think, sir, above this I'm taking long, but it's not going here. Below this I'm taking short, it's not going. He doesn't know, right? Because we are in range. So that reason, and I showed smart money. And without SMC also, I would have buy here, because I work in, whenever it will come near support or resistance, definitely I look what candle is now I'm seeing. See this zone, I'll show you this zone. When it come here, if it came here, I got evening star candle. So beautiful it came. See, if I take short here, my stop loss were somewhere like, okay, 30 pips. See, the target was huge, but I don't want to go opposite direction. It can be fake, because before this it was like bullish candle. So I didn't take any short. But I'll go for long. And you asked me 200 and all. Yes, if you use 200 EMA with this, I'll show you here.
Is the 200 on the 1 hour or the daily?
Yeah, 1 hour daily. 1 hour, 1 hour.
When it's 5 minutes, is it still on the 1 hour?
This is 5 minutes, sir. This is 5 minutes.
But the 200 is on the 1 hour.
Yeah. Both I am using to show you. I'll show it to 1 hour first. This is weekly. You can see about 200. It's like go 1 second. I'll switch off this Trendex. You can see.
Pramod, I think what he's asking if the EMA are fixed to the short time frame, or are fixed to 1 hour, or fixed to 5 minutes.
Sir, 1 hour and 5 minutes. 5 minutes to just see where it is. I'll show you in 5 minutes also.
Okay, but it's fixed. It's fixed to the chart.
Yes.
Oh, okay.
Always. You can see here also. You can see. You can see here 200. Even in MT4 in my broker, I'm using same thing. See, I'm using because the 200, like seriously, candles no 200 the attract candle will attract for 200 every single time. So whenever you will be above this, it will be bullish only. For confirmation, you have trend X. You see, without this also, you see now it was downside, right? It was below. If I switch on this trend X, see it was below. So when it came, sir, even we teach same thing. Whenever you will be above the trend X, you have to take long. You have two confirmation here. See here, and you can just you can see. I'll just switch off this. See, market didn't come here. If you are waiting to come here and I go for long, it didn't come here. It just turned from here only. Again, it take support here. If you switch on this support, like it was giving here 200. You can see here, see here, every time. So you should not go long when it comes here. You have to take confirmation in 5 minutes daily time frame. I mean daily pivot. So when structure will shift in trend X, automatically 200 also it will come. See, last week I took 2 stop loss. Seriously, I took 2 stop loss because it was all-time high. This was market was all-time high before this, right? This was all-time high. So when I saw this move and it market closed somewhere here, and you see the trend X, what happened? So I was below trend X. So I thought best time to take a short positions here, because this was all-time high. I thought, okay, no, we'll go for short. But when I started this, like when it came here, I took immediately short and I was holding till here. I got stop loss it. I thought, what's happening? No problem. Again, it came. See here, I got confirmation, but I was like thinking, no, we will wait. When like I went 5 minutes, 5 minutes was in bullish. I don't know what's happening. We'll wait. Again, next day I saw. Next day morning I saw I got bearish engulfing. I took immediately short when it got here. Again stop loss. I thought no, something is wrong. I know that time like let's check 1 hour what's happening. And when I saw this, I was like seriously shit. I every time single day I will be using that day I didn't see this. So whenever we'll get in this way, it will be very confirmation that we are in sell trend. It was giving here support. Trust me, that day I did not see. I don't know why. I that later I assume oh my, but I immediately stopped taking short. I was looking long, and I told to Switzer also I made this mistake, sir. So for this reason I'm using. Not only you can back test with Trendex in 200, you just check, sir. You don't take any entry above. If you are above this, you take no. We should not work above like that. We have to see how its market behavior. See, this is it's showing you like sideways. It'll all be morning only. It will show you when market. I'll just switch off this. See market. It will show you direction. It's showing you taking. It's taking dynamic resistance or dynamic support. It will take. In that reason, I told how to use this. If you are taking long position, before taking any long position you have to see where is the 200. See, it is massive move. If you are if you came last week for session, I was talking about this. If you didn't take any trade here, if you didn't take any trade here, you want to take new fresh trade. If you are taking fresh trade, you have to see where is the 200 EMA. If 200 EMA is like above, then it will be risky. It was confirmation, it was below only, means I have double confirmation. Okay, 200 EMA, you can keep your stop loss below that. Done. This was the event. This was event candle. So we don't consider, we before event we don't take any trades. After event only we'll take. So it came down, people start taking short, but I was waiting to break either this, either again.
Pramod,
So I got
can you explain what the event candle is? I don't think people know what you meant by that. I know what you mean by it, but not everybody would understand an event candle.
No, I don't have in this computer a premium subscription, sir.
No, an event candle. What would that event be? What would that mean? You said that was an event. That was an event candle.
Yeah, it will be very volatile.
In forex.
Can I show you on YouTube?
Yeah, because you said you wouldn't trade on an event candle. So
I'll show you how it will behave here. It will like crazy. I'll show you. So we won't trade. I think it will affect even this also. Like in I don't know about this. What in crypto I don't know, but in forex
if there's planned news event such as the CPI data or
yes, that's right.
CPI, NFP, FOMC.
If Chair Powell is going to do some sort of information about interest rates, et cetera, et cetera.
Exactly. So when we'll get these events, we won't trade because it will be like crazy movement. Like see in this way, we'll get huge drop or we don't know what will happen. And stop loss, it doesn't work. Stop loss, it will be more slippage. Today also it was event. Today was PPI. This candle. So I thought it'll drop or it'll move, but it was only this much. And we got
this morning. We're wondering why BTC moved like that, and that was why, because there was an event candle because of the data coming out this morning.
Yeah, we should aware, sir. We should aware that. See, I showed, but I'll show again. We have one forex market. Okay, we have forex factory. If we go here, if you we'll get details every single day. See, Today is like Wednesday, right? See, sorry, yesterday was CPI. Today was Thursday. Core PPI, PPI, whichever you're seeing red, this is important event. It will be like very crazy. So at this time, at 6 p.m., we won't trade. We stop trading 5 p.m. only. We'll wait after news. See, we got like in USD. This is USD, right? Gold runs opposite to USD. So we got negative USD. It means gold will start running today or tomorrow morning. It will start like, we'll get indication that gold will fly. So in this way, see yesterday like CPI. So CPI got, USD got positive. All three news got positive. So gold will fall. Gold. You can see gold dropped massively here. Like this is huge for us. This is like huge. If you like, if I take long position here, if I hold, it will be like account will literally it will go. So we won't trade before news, before event. It will be start ranging. So nobody will trade at that time. We'll wait for next day. After news, we'll trade. I'll show you how to trade in 200. Don't think, and again I'm telling about this. When it start crossing, people are asking, sir, Pramod, candles are crossing 200, shall I take long? How can you take? That is not way. There is no support, right? We have to take when we'll get near support. That is like dynamic. If you are taking any long from here, that you will know that it can reject from here. So I'll close my half positions when it will come near here. Because whenever you will take the trade, you will be the opposite only. Because we are in uptrend, market is coming near support. I'll take long position. It came near 200, it will reject. Again, I'll take a long position. Again, it will go, it will reject. It not mean that I'll go for short here. We have to opposite, because we are trading. We are taking our trades for long position. So we have to trade in that way. Today, see, even today it was so confusion. You can see, I took long position here morning. When I got up, I saw this, like I took long position here, and my trade was like start already. My old trade was running. I took my trades here, and when I got this move, my stop loss was break even. After seeing this candle, I got impressed. I thought it will go now. This. So when I saw this like low and made lower high, when it got breakout, I thought no, it can drop again. So this again I got this drop. I didn't take any short position. I was planning for long position. Same place, you can see, you just mark yesterday's where we got rejection. This completely zone we have to mark in this way. Completely wick to body. Always remember, we have to take from wick to body. Again, I got here. Definitely, I look any good confirmation. I got bullish confirmation. Definitely, I go for long. I'll keep my stop loss here and start. When we'll reach good profit, like somewhere here we'll get. We have to move our stop loss to entry point. We don't know, right? It can come again. It can make new low. So by luckily, like we got event here and it start going here. I closed my position. Again, when it came here, I saw this candle. Again, I took here my positions. So in this way, always remember, morning whenever it will make one high and it will come back. No, you mark that zone. Same thing. Whenever evening it will go, we have to mark that zone for before one day. That's it. Tomorrow again I'll continue this. Tomorrow I'll do like this. Okay, I'll remember. Okay, this was rejection, because if it made new low again, then we need this. If it is not coming here, then tomorrow will be previous low. So I don't need this. So I'm looking long positions again and again gold, because we are in uptrend. Anytime it can go, and I made something like this. And this is happening here. If I get breakout, then definitely I'll go for long, because we are in completely in uptrend. That's it, sir. And tomorrow I'll come, Friday, right? Tomorrow I'll come and I'll show you each and everything, like how to take trades in Trendex with confirmation candles, and which candle will take you bull, and where should be the candle. If you're getting any candle confirmation here, we should not take. Either we should take, like you can see multiple rejection yesterday. We have to get candle here confirmation. So whenever this will happen, right? This is like not exactly, but we can tell this is 1, 2, 3 move. This is confirmation that this is it will go. So we can take another trade here when we'll get breakout. So this all I'll show you tomorrow, and it will work. It's working for me. Then obviously it will work for you. And now, and this one thing, which pair I was seeing yesterday? Yeah, 1 hour I'll check. Last session I told, sir, if somebody is here, you can. What I told you, sir? I told it won't go. It will come back. You remember I told this. I told this. When I only shared this. I shared this into the group, and I told this is the last, and try to short from here. It won't go because this is descending trend X. You can see it's making low, right, sir? And it came short. Exactly now what I last session I told you, don't look any long positions. When it came here, I told don't look any long position. It will come down, and this was perfect. And one more thing I told, which one? Yeah, this is what I told last week, last session. So when market was coming down, somebody asked next what level. I told you wait till here, it will grab everything. When you will get bullish candle, go 5 minutes, you take long position, and your TP will be this, and it get TP. And immediately you should not take any short position. I don't know why it's moving so much, why it's coming. I don't know what's happening with this pair, but you should always alert. When you will get your profits, immediately you should book 50% or complete full profit. And you have to, you should do that, sir. Whenever you will get some profits, right? Like some 50, I don't know about how you will count this price, but we'll count as a pips. When you'll get some 70, 80 pips, immediately you have to close 50%, and you have to hold 50% every single time. You should not close your profit full, because this trade can be your swing trade. See, I took this trade, I'll show you. I took near 2026. Somewhere I took here, sir. Still I am holding 2026. Yeah, here. I took my long positions here. This bullish candle 2026, exactly this. I took my position here. Still I am holding. See, where is the market now? You can see almost 4,500 pips. You can see here, massive move. Still I am holding. So in this way, if you are in trend, when you start taking your break evens, then only you will take big profits. That trade, it can be your swing trade. Every trade can be your swing trade. At least you hold 20% your positions with break even, not stop loss. When you will take the position, when you will get good profit, take your stop loss and keep your stop loss above your entry point. Who knows, it can give more than that. So you start doing that, you'll get very, very good profits. So now if I get short from here, definitely I'll start swing trade, because we are in like huge high. It can drop like till here. See, we have already plans. I'll show you how we have to see. So when yeah.
I didn't understand the last bit. You said when you take some of the profits, you leave the profits in because it can be a swing trade. Where did you move your stop loss of the entry?
Above the entry point, yeah.
Above the entry.
Exactly, above the entry, just like this, sir. You can see one second.
TP1.
Yes, you can see here. This is, you can see this red line, right, sir?
I see it, the dotted line.
Not this one. You can see very like light.
Yeah, the dotted line.
Yeah, dotted line. Yeah, that is my exit. If it drops, then I don't get any profit or loss.
Okay. You get half your profits if you leave 50%.
Yeah. After taking my half profit, I'll keep my stop loss up here, and then no worry, because if it suddenly drop, no problem for like. If it hit this, all my position will close automatically. So it can be swing trade. So for that reason, every single time I'll do that, sir. Every time I'll do that. No problem. I take every day my break even, but someday it will take me long ride. See, I'll tell you. Yeah, I'll show you. When see, still we didn't get, after taking breakout here in D1 time frame. We thought retest it is running. If gold start dropping, no, definitely it'll come here and it'll start going new high. So I'm waiting for that day to come here. If I get here, and again it will be bull run. See, this you have to trade in this way only, sir. So yeah, this is in daily time frame. See, whenever we'll get it short, again after 6 months we got again big move. This was liquidity sweep. Candle closed inside. Next day we got short. Again it went. It was keep like some one day it gave breakout and it start going now. Without retest, it's running. Same thing in BTC also. BTC. BTC now it can retest in daily time frame. See, after breakout structure here, we have two demand zone. After break, we have two demand zone here. I don't know it will come here or no, because it's completely bullish, but we have two demand zone. It can go from anywhere. This is daily time frame. It's not like so easy to come here, and it will take many days, but we have already two demand zone here. In this, like in this situation, you have to trade in 5 minutes, 1 hour. Same thing, we have to draw everything, which is high, which is low. Yesterday, where market was like pushing downside or going upside, that zone will work for the intraday demand or supply. So see, yesterday supply was, today was demand. But I was like thinking it will break and it will go, but I was wrong. And even New York session also, I got like, I was wrong, because after we got positive in event, I thought it will break now. No need to worry, we'll hold. Again, it immediately it came back. I thought, oh my God, I like, I thought like pressure is like seller are present here. So we'll get confirmation before dropping. So immediately when I saw this, like I was holding, when I saw this candle, immediately I closed my position, because I was not knowing it can come very fast. So again it took breath here, again it started running, again I took my trades here. Again now I'm holding now. So I'm assuming that it can make new high. Like same thing, like new high. I'm waiting for new high, and new high is here only. It's not so far, here only. This is the all-time high. It's only 200 pips. It can go within single candle. See, if now I'll show you now. what people will do, they'll wait to close this candle. I'll show you. They'll wait to close this candle. It has to come here. They'll take the trade. They'll keep their stop loss somewhere here. If this candle close this inside, then only they'll close the trade. They don't keep stop loss here because it can be in this way. So what they'll do, they'll take the trades after closing this candle. They'll keep stop loss somewhere far. They'll wait. If next candle is coming down and again it's closing, then it was a trap. Immediately they'll close the positions. Even I do same. I don't take any long positions now. I don't take. I'll wait. I'll wait to close the candle. If I get good candle, like we should not see big wick again. If candle closing here, then no use. We need good body. Let's wait for 59 seconds. People like new traders, like who are they're trading this way only. Like they're trapped. After seeing this candle, immediately they take a long position. This candle, now what they are showing bullish, immediately it will be shooting star.
Pramod, your audio is cut out.
You're on mute.
Taking the trade.
I don't know what happened there.
Yeah, sir. Done, sir.
Pramod, you're on mute again.
Pramod, you're on mute. Can you just repeat the last couple of minutes?
Yeah. I'm seeing, sir. I'm not talking. I was just seeing. Yeah, tomorrow
Okay.
we'll meet, sir. Tomorrow I'll come with some good, good strategy.
Fine.
I don't know whether you people are like beginners. Yeah, at least you know smart money, or I have to start completely SMC from basic. If you want to teach from basics, then I am ready to teach from basics.
I think you were saying you were going to bring some rules together on a PowerPoint presentation, Pramod, for us to follow a checklist and rules.
Definitely, I am already. I'm in that process, sir. Still, I have to I have screenshots. I have to make. With this, first I'll teach you with PPT. Then I'll come into the real market. I'll show you.
I can't wait, Pramod. I can't wait. This is just great stuff. With you and Trendex, I think I might be able to retire in a few years, eh?
Definitely.
Definitely, sir. I'll come, and I'm sure everyone. I'm sure I already told Seth, sir. Trust me, sir. Every single person will make profit in this group. I have
Just
multiple.
learning how to retire because you'll still want to be glued. It's addictive.
Yeah, I know. I can imagine. I can't. I was only joking about retirement. I can't imagine me actually stopping work. It would just be too boring. Can you imagine sitting on a beach sipping pina coladas when you could be doing this?
with an Apple Vision Pro on.
Can you imagine the goggle eyes you'd have with that?
Seth, if you're there.
Pramod and Seth, I just recently came across a really quite simple indicator that, in my opinion, is going to be a fantastic addition to TrendX, and I believe you'll be able to have a version 2. I've been recently using with it that indicator with TrendX, and it gives you even a much better visual of where you are with the trend and where you should be trading off of. I can show you that later on as well. I think it's going to be fantastic, and it also simplifies a little bit the TrendX lines. Sometimes it can be really busy to find your places where you are with the trend, but it's a really simple indicator that also shows you daily, weekly, and monthly locations where you could be also starting your trades off of, which are the most, the best demands and supply locations.
And you write it down for us.
What's
Sounds
that?
great.
Yeah.
Yeah, I'm very excited to see.
This is something.
The trader's reality. Is
What's
that the
that?
trader's reality, mate? Is that the TRM?
Well, I play with all kinds of different indicators. Okay, that's just something that I do. I'm sure Seth, he's been doing this quite a lot in his days as well. But I love to look for new indicators by completely, independent coders that do their own stuff, right? Which are quite basic, but they can be also quite powerful. And I just found something, came across something that's gonna also help a lot to find the proper trends where you are at specific locations. So we can also have a Seth discussion about that. Maybe I can show that when we're gonna have our next session.
Definitely, I'd love that.
Sounds exciting.
It simplifies even more of what we already see. But with everything that I do, I always try to keep everything as basic as possible, as clear as possible. Need to do and where you should start your trades. Okay, because that's, in my opinion, was always my biggest issue, where I should be starting my trades and what will be the best location if I want to keep a trade for a long term or a short term. That little tiny indicator shows you almost the best locations when you actually also introduce this with TrendX. So, and by the way, guys, price action, Seth, that was a fantastic introduction to price action. That's something that I also use quite a lot. That also gives you a clear roadway, which way trend is going and how you should be trading. Going shorts, going longs, the minute you understand price action, you know where the higher highs are, lower lows, so on and so forth, everything just becomes clear. Just wanted to say something about that. That's all.
Nice, sir. Tomorrow again we have a session, sir, at same time. So tomorrow we'll go through about that, sir.
Good.
Yeah.
Is it going to be the same time as today? Is it going to be put on the? Is it going to be put on Zoom so we can book it into our calendars?
Yes, we will load it onto the Zoom.
Amazing. Thanks, Seth. Education piece
Pleasure.
this morning was this afternoon was really, really good, and Pramod did his magic again. So thank you very much.
Awesome. So happy that you're enjoying it.
Thank you so much, sir.
We done?
Are we done, Pramod? Are you done for today? Or are we gonna leave it at that?
I think he's 100xing gold.
Yeah,
He's
sir.
trading that gold already.
1000xing.
1,000. Real DJ.
The exciting thing is in the UK, you can actually spread bet gold, which makes the profits tax-free, which is like a little bit lovely.
Yo, that's great. Very, very nice.
Yeah, man.
Pramod, are you done? Are you
Yeah,
finished?
sir. I'm done, sir. I'm done.
Okay, perfect,
mate.
perfect. All right, guys. So it looks like we're done for today. But Pramod will be back tomorrow with his super special training that he's really putting together some nice things. And yeah, he'll be teaching a class on every Friday and Tuesday, and then I will continue my regular slots. So there's a lot more classes, and we will put it all in the events calendar. And for everyone that wants to continue the session, if you want to meet in the voice chat now, a bunch of people are going to meet in there and continue talking about what we've been discussing today. If you still have some energy left and you want to carry on, but otherwise, thanks a lot, guys. Great to see you all here. And we will see you again soon and see you in the group.
Seth,
I've also got.
Thanks,
I've
everyone.
also got
are you going to mention the gummies thing here?
Yeah. I'm going to talk about now. So, guys, we've got a gummies announcement that I'm going to put in the group now.
Please.
I've been allocated from Crypto Banter some airdrop to drop into the group. So anyone in the group who has who's in the group, there's just one a task, and if you haven't left a review, so basically everyone in the group just needs to leave a review and then fill out a form, and then they'll all get allocated the airdrop. But I'll put an announcement right now in the group with the form. It's pretty exciting, guys. This gummy is going to be huge. Can't wait.
Do we get the real gummies as well?
Yeah, we can send some your way as well. Just pop your address.
We'll do.
Yeah.
Bonus.
We got to go
That sounds even better, actually. Never had one.
I want to see Ran on the gummy. That's more fun.
Yeah, Rand's very funny on the gummy. All right, guys. See you in the group.
Cheers.
Take care. Take it easy.
Thanks a lot.
Ciao.
Have a good weekend.
Bye-bye.
Yeah,
Take care.
you as well. Bye.